I mean, in terms of what this means for the market, it could mean good news for the equity market if you actually see earnings for oil companies pick up here in the United States.
Yeah, I mean, it could be. People are looking at earnings very carefully. Obviously, we're coming into earnings season. We're actually, I'm actually paying most close attention to margins, right? I don't actually, it's nice that they make profits. We want to see sales go up, but you need to see margins continue to kind of be at a healthy level because that tells you the economy's got a buffer zone. And if there is a downturn in the economy for a little bit, it doesn't necessarily mean layoffs and reduced CapEx.
What have you seen so far in the earnings that have been released when it comes to margins?
I mean, the margin numbers over the last year or so have actually been really healthy and actually quite stable. And that's one of the reasons why we don't expect a recession anytime soon is usually you see margins decline pretty precipitously. That's a bad combo of words before you actually get to a recession.
Jason, let's just talk about technicals and what we've seen so far. You saw the S&P break through that range. I guess it was 2,800 to 2,816. We're now looking at S&P above 2,900. So what happens from a technical perspective?
So from our point of view, we've had a 2,950, 3,000 base case target zone and thinking that would happen by the end of the summer. So as we crawl toward that area here with the S&P, we're not inclined to aggressively buy the broad market. What we'd rather buy are the groups that hadn't worked in the first quarter, didn't lead in the initial rebound, where you saw semis, technology, other groups take a leadership role. What we like now is looking for things like PMI to turn the corner. What groups tend to act well in that environment? Energy, one of them. Financials and materials are the other two that we're focused on right now. And then the things we should see underperform here if we get it right. One, global fixed income should sell off. And then utilities and other defensive should underperform in that environment as well.
We haven't seen global fixed income sell off. I mean, if you look at the flows that we saw in the most recent week, according to EPFR, we saw the biggest inflow into bond funds since, a couple of years. 2015, I believe, is the number. Yeah. So what do we need to see happen for you to be convinced on that?
So on the fixed income side, we've already gotten the technical sell signals that we look for, and that happened in late March. We have a number of systematic strategies that we've built that look at positioning, sentiment, and price momentum. Those all triggered sell signals very similar to the summertime of 2016 when global PMIs and on the manufacturing side turned the corner. Same sets of signals fired then. So we're seeing what we'd like to see there.
Drew, very quickly, what's your favorite sector right now?
I mean, we're a fixed income shop, so private fixed income assets.
Which would be specifically, what would you tell people to buy?
I mean, it's nothing people can buy. It's stuff that we can buy. And that's why we like it, actually, because it allows us more flexibility.